The news out of Detroit is nothing short of shocking. General Motors has just unleashed a tidal wave on the automotive market, dumping 3 million trucks onto dealer lots across the country. For months, whispers of bloated inventories and slowing demand have been circulating, but this sudden move makes it crystal clear. GM is bracing for a market freefall. Showrooms that were once empty during the supply crunch are now overflowing with Silverados, Sierras, and heavy-duty models stacked bumper to bumper. The sheer scale is staggering, and it's sending shivers through the entire industry. Analysts are scrambling to make sense of this. 3 million unsold trucks is not a small adjustment. It's a signal that GM is willing to slash prices to keep the assembly lines moving. Dealers from Texas to Michigan are already reporting jaw-dropping discounts. Trucks that carried price tags of $70,000 or more just last year are now being marked down by tens of thousands. Some buyers are walking in and negotiating prices we haven't seen in over a decade. Incentives, rebates, and low-interest financing are pouring in faster than customers can even process. This sudden flood isn't just about moving metal. It exposes deeper cracks in the market. Rising interest rates, higher fuel costs, and economic uncertainty have pushed many potential buyers to the sidelines. What was once America's most profitable vehicle category is now turning into a battleground of desperate deals. GM's rivals, Ford, Ram, Toyota, are watching closely because once these price drops hit headlines, the entire truck segment will be forced to respond. And when one domino falls, the rest don't stand for long. For GM, the gamble is clear. Better to take a short-term hit than to let inventory pile up and production grind to a halt. But this strategy is risky. Slashing prices trains consumers to wait for the next discount, and it eats away at the brand's hard-won profit margins. Wall Street is already reacting, with GM's stock swinging wildly as investors debate whether this is a masterstroke to regain market share or the first sign of a deeper crisis. Dealerships, meanwhile, are caught in the middle. Some are thrilled by the traffic, reporting record footfall as word of massive markdown spreads. Others fear being left with trucks that depreciate faster than they can sell them. Across the Midwest and the South, regions where full-size trucks are a way of life, the atmosphere is electric. Customers who were priced out months ago are rushing back, eager to capitalize before the market shifts again. Yet behind the excitement lies a sobering question. What happens to the value of trucks already on the road? Owners who bought during the pandemic's high-price frenzy are watching their investments shrink overnight. Resale values are plunging, and used truck lots are bracing for a wave of trade-ins that could further drive down prices. The ripple effects will touch insurance rates, loan balances, and even small businesses that rely on fleet vehicles. Industry insiders warn that this move could trigger a price war, pulling every automaker into a race to the bottom. If Ford and Ram are forced to match GM's discounts, the entire truck market could see a historic reset. That's not just a headline. It's a fundamental shift in how Americans buy and value their most iconic vehicles. And with economic headwinds gathering strength, this could be just the beginning of a much larger storm. Suppliers are already feeling the shockwaves. Parts manufacturers who feed GM's massive production network are being pushed to renegotiate contracts as forecasts swing wildly. Steel and aluminum orders that were planned months in advance are now facing sudden cutbacks. Transport companies hauling these trucks from assembly lines to showrooms are juggling overflow lots as carriers struggle to keep pace. Every link in the chain is tightening, because when 3 million trucks hit the market at once, the ripple is closer to a tidal surge. Inside GM's executive suites, the mood is tense. Executives know this isn't just about clearing inventory, it's about sending a message to Wall Street and Main Street that GM will fight for dominance in the most profitable vehicle segment in America. But insiders hint that boardroom debates have been fierce. Some leaders push for even deeper discounts to capture market share quickly, while others warn that once you cut prices this aggressively, it's nearly impossible to climb back up without damaging the brand's long-term value. Financial analysts are dissecting every move. They point to rising borrowing costs that are choking buyers' ability to finance big-ticket purchases. A full-size truck loan that looked manageable when rates were near zero now feels like a mortgage. That alone explains why even loyal customers are hesitating, and GM's strategy is a direct response. Flood the market, drop the price, and hope volume compensates for the margin squeeze. At dealerships, Sales managers are turning into field generals, organizing flash sales and overnight events to move units. Some lots are opening around the clock, using social media blasts and live-streamed walkarounds to lure customers. The frenzy is so intense that used truck dealers nearby are slashing prices in real time to keep from being undercut by the new stock just down the street. Stories are emerging of customers walking in, expecting to buy used and leaving with a brand new truck for nearly the same payment. Competitors can't ignore this for long. Ford's F-Series and Ram's 1500 have ruled the segment for years, but with GM detonating prices, those brands face a brutal choice. Hold the line and risk losing buyers, or follow GM into the discount spiral. Automotive insiders say meetings at rival headquarters are running late into the night, weighing the cost of protecting brand prestige against the danger of losing market share overnight. The consumer response is almost instant. Forums and Facebook groups are lighting up with reports of unheard-of deals. Videos of buyers driving home $60,000 trucks for under 40 grand are going viral, turning the sales rush into a national spectacle. What began as a quiet inventory adjustment has exploded into a full-on buying frenzy, and the weekend isn't even over. And as the frenzy builds, economists warn that the aftershocks could stretch far beyond the auto industry. Truck sales have long been a bellwether for American economic health, signaling confidence in construction, oil, agriculture, and small business investment. A collapse in pricing at this scale could ripple through those sectors, dragging down everything from housing starts to equipment orders. What we're witnessing isn't just an automotive story. It's a snapshot of how fragile consumer confidence has become when interest rates and inflation squeeze every dollar. Meanwhile, union leaders at GM plants are watching closely. Assembly line workers, already uneasy after recent contract negotiations, worry that a prolonged price war could lead to production slowdowns or temporary layoffs. While GM insists its plants will keep humming, whispers of shift cuts are starting to circulate in towns where a single factory feeds thousands of families. For these communities, the stakes are far higher than a cheaper truck. They're about livelihoods hanging in the balance. Local economies built around those massive truck plants are bracing for impact. In places like Flint, Arlington, and Fort Wayne, where GM's full-size pickups roll off the line by the thousands, small businesses, from diner owners to tool suppliers, depend on steady production schedules. A slowdown or temporary pause in overtime hours could ripple outward fast. Bankers who approved auto-related loans are quietly revisiting their risk models, wondering if they should tighten credit before defaults start climbing. Even the used car auction houses are seeing unusual signals. Trucks that once commanded premium bids are now sitting longer on the block, buyers hesitating as they calculate how much further prices might fall. Fleet managers for construction firms and delivery companies are pressing pause on purchases, convinced they can shave thousands more off their costs if they just wait a few weeks. This kind of buyer psychology can accelerate a downturn all on its own. When everyone expects cheaper deals tomorrow, today's sales evaporate. Wall Street analysts, meanwhile, are slicing through GM's quarterly projections. Profit warnings from suppliers, coupled with an unexpected surge in dealer incentives, are prompting revisions to earnings forecasts. Investment firms that once praised GM's tight inventory discipline during the pandemic are now questioning whether management underestimated how fast demand could soften once interest rates climbed and household savings thinned out. Fuel prices add another layer of tension. With gasoline edging higher in many states, some shoppers are second-guessing the wisdom of owning a massive V8 truck at all. Hybrid and EV alternatives look more attractive with every price spike, and rivals like Tesla and Rivian are quietly eyeing the moment, hoping to capture a sliver of buyers who might jump segments entirely. Inside dealerships, the atmosphere is almost surreal. Salespeople describe parking lots so full that new arrivals are being staged in neighboring fields. Temporary lighting towers and rented fences are popping up to contain the overflow. Managers are pushing creative tactics, bundle deals with service plans, lifetime warranties, even home delivery perks, to tip hesitant buyers. One Texas dealer reported selling a Silverado every 15 minutes during a Saturday blitz, yet the lot still looked as full at closing time as it had at dawn. Financial institutions are watching consumer credit indicators like hawks. Delinquencies on auto loans were already creeping up before this price shock. If values plunge further, many owners could find themselves upside down, owing more than their trucks are worth, at a speed not seen since the last recession. That's the scenario economists fear most. A spiral where declining values and rising defaults feed each other and slam broader consumer spending. Through it all, GM's leadership insists this is a calculated strategy to realign inventory with demand, a phrase meant to soothe investors, but one that insiders admit masks a deeper scramble. As they juggle supply chains, dealer incentives, and Wall Street expectations, the company is wagering billions on a rapid rebound in buyer confidence. But every day the lots stay jammed and discounts deepen. That bet looks riskier. And the entire American truck market watches, wondering how long the fall can last before the real damage begins. Regional governments are starting to weigh in as the numbers grow too big to ignore. Tax revenues tied to vehicle sales, especially hefty truck registrations, feed local budgets for roads, schools, and infrastructure. County officials in key manufacturing states are quietly modeling worst-case scenarios, preparing for a sudden dip in those revenues if prices and sales keep sliding. Economic development boards, once boasting of record-breaking auto investments, now worry about the ripple effects on everything from housing demand to municipal bonds. Logistics hubs near GM plants are also under pressure. Rail yards in Illinois and Ohio are stacking trucks on overflow tracks, while trucking companies scramble for temporary storage contracts. Some carriers are even leasing abandoned shopping center parking lots to hold excess inventory. Every day a truck sits idle costs money, and the logistics tangle adds another layer of expense to an already costly strategy. Credit markets are reacting too. Lenders that once rushed to finance $60,000 pickups at near-zero interest rates are tightening terms, demanding larger down payments or higher credit scores. Dealers who depend on easy financing to close deals are voicing frustration, warning that even the most generous rebates mean little if customers can't secure loans. The combination of steep discounts and stricter lending creates a paradox: record low prices but still fewer qualified buyers. Meanwhile, consumer behavior is shifting in real time. Shoppers who never considered buying new are now touring showrooms, calculating how close monthly payments can come to their current used truck costs. Social media feeds overflow with videos of bargain hunters comparing deals, fueling a sense that waiting even a week might unlock another round of markdowns. That mindset freezes demand further, leaving even more inventory stranded on lots. Competitor brands are tightening their own strategies. Ford insiders leak whispers of emergency marketing campaigns, while Ram dealerships quietly prepare loyalty bonuses to keep buyers from defecting. Japanese automakers with smaller footholds in the full-size segment see an opening to grab market share with niche hybrid offerings. The entire truck landscape feels like a chessboard where every piece is suddenly in motion, but no one knows the endgame. Back at GM headquarters, engineers and product planners face a different kind of tension. They're deep into development cycles for next-generation EV pickups and high-tech drivetrains, projects funded by the profits of traditional truck sales. If margins collapse for too long, those future programs risk delays or cutbacks. What began as a tactical inventory move could end up reshaping GM's long-term innovation roadmap. In neighborhoods across the Midwest and South, the human stakes are becoming impossible to ignore. Families that rely on overtime pay from assembly plants are quietly tightening household budgets. Local diners and hardware stores that thrive on steady factory traffic report slower lunch hours and fewer weekend crowds. The trucks may be built in gleaming modern plants, but the consequences of a market in freefall land squarely on ordinary people whose livelihoods depend on every vehicle that rolls off the line and into a willing buyer's driveway. Community leaders are starting to organize emergency meetings, trying to get ahead of a downturn that could drain entire towns of momentum. Chambers of commerce in Michigan, Indiana, and Texas are drafting contingency plans to support small businesses if factory overtime dries up. Local credit unions, which hold thousands of auto loans, are quietly setting aside larger reserves to absorb potential delinquencies. Even school boards are running projections to see how a sudden drop in property and sales taxes might impact next year's budgets for teachers, buses, and maintenance. Real estate agents in truck country suburbs are noticing subtle but telling signs. Prospective buyers who work at GM plants or supply companies are delaying home purchases, worried that the next round of layoffs, no matter how temporary, could leave them stretched. Sellers, sensing the same anxiety, are cutting prices faster than usual to keep deals alive. Housing markets that once thrived on the stability of the auto industry suddenly feel fragile, with for-sale signs lingering longer on front lawns. At the same time, national media outlets have seized on the spectacle. Drone footage of endless rows of unsold trucks is looping across cable news and financial networks. Headlines frame it as a warning shot for the broader economy, and every broadcast fuels more caution among potential buyers. Economists warn that such coverage can create a feedback loop. The more people hear about collapsing prices, the more they hold back, intensifying the slide GM is desperate to reverse. Labor unions are also sharpening their messaging. Representatives for the United Auto Workers are demanding transparent communication from GM leadership, pressing for guarantees that no plant will face sudden furloughs or cuts. They know that uncertainty can fracture morale on the line, slowing production even when orders remain steady. In closed-door meetings, union strategists are already gaming out scenarios for emergency negotiations if the market turmoil deepens. Even the aftermarket is feeling the tremor. Companies that sell lift kits, custom wheels, and performance parts are reporting softer orders as truck owners hesitate to invest in vehicles that might lose value overnight. Specialty shops that depend on a steady flow of enthusiasts are trimming staff hours, anticipating a lean winter if the slowdown sticks. Financial markets, meanwhile, continue to send mixed signals. GM's stock price seesaws daily as investors try to predict whether the price cuts will spark a sales surge or simply erode profits beyond repair. Analysts on earnings calls pepper executives with pointed questions about cash flow, inventory targets, and the pace of EV investment. Every cautious answer feeds another round of speculation, keeping the company in a relentless spotlight. Amid all this, consumers are rewriting the playbook. Pickup forums buzz with stories of buyers forming informal groups to track the steepest discounts, sharing dealer contacts and screenshots of out-the-door prices. Some have even begun road tripping across states to chase the best deals, turning what was once a local purchase into a national hunt. Each viral post raises expectations that prices will keep falling, adding more fuel to a fire GM is struggling to control. Dealers are responding with increasingly bold tactics to keep momentum alive. Pop-up Truck Fest events are springing up in mall parking lots and fairgrounds, complete with food trucks, live music, and on-the-spot financing booths. Some dealers are waiving delivery fees and throwing in free accessories, bedliners, tow packages, even extended service plans, just to move a few more units before month-end. Salespeople describe the atmosphere as part carnival, part clearance sale, with customers haggling late into the night under portable floodlights. Regional advertising has turned into an arms race. Local radio and streaming ads scream about once-in-a-lifetime markdowns, while giant roadside billboards flash digital updates showing real-time price drops. Social platforms are awash in short videos of happy buyers driving away in brand-new trucks for prices that seemed impossible only weeks ago. Each viral clip adds pressure on neighboring dealers to match or beat the latest deal, creating a self-reinforcing cycle of markdowns that shows no sign of slowing. Fleet buyers, landscaping companies, delivery services, rural contractors are quietly negotiating bulk purchases that would have been unimaginable a year ago. Some are locking in contracts for dozens of trucks at per-vehicle prices that rival pre-pandemic levels. Industry insiders note that these fleet deals, while welcome in the short term, further compress margins and leave GM with little room to recover if market conditions worsen. The shockwaves from GM's massive truck dump are still rolling across the country, and there's no clear finish line in sight. Prices keep sliding, competitors are recalculating, and buyers are rewriting the rules of the game with every viral deal. What started as an inventory correction has morphed into a nationwide reset of how Americans view their most iconic vehicles. Whether this bold gamble ends as a masterstroke or a cautionary tale will depend on what happens in the weeks ahead. One thing is certain: the truck market, and maybe the entire auto industry, will never look quite the same again. If you found this breakdown eye-opening, hit subscribe and tap the bell so you never miss the next big shift in the auto world. because the next chapter in this truck market shakeup is coming fast.